Have you ever sent an email to CNBC but never heard back? I have. Have you ever had a trade go against you while you're asleep? I have. Have you ever looked at that big aisle full of whiskeys and total wine and wondered how are all these different? I have. And lastly, have you ever wanted to buy your dream car but didn't know how or have the means to? I did. I'm Vikram Gore and welcome to Markets, Malts and Machines, the weekly show about, you guessed it, the stock market, the finest single malts, and cars, and more cars. The objective of the show is to give men and women a leg up across all these three topics, especially so if you're doing this all on your own and would appreciate a third party, well informed, well researched opinion and an input along those lines. So let's get started. So you don't think the stock market is for you, or you rather have a professional manage it for you? Well, let me tell you from my personal experience what's happening. A few friends' stories, right? One of them is a bit older, wealthier, and protecting his wealth, right? So he sold everything off at the beginning of March and then never really got back in. Another one who's in a wealth building phase, younger, he thinks he can time the market. Yeah. And he'd rather wait for a pullback to put his money in. And then another one, a third one, just like me actually, is trading, a bit more active in the market, but certainly would appreciate another piece of input and well-researched point of view. But before we start talking about the help, right, let's talk about why any of this matters. Two things. One, the total value of the stock market today in the United States is about $36 trillion. Number one. And number two, the top 10% of income earners own 87% of that $30 plus trillion stock market. Let that sink in. Top 10% own 87% of the total value of the stock market. Are you in it? And if not, why not? Look, here's why any of this matters. Number one, the Fed's balance sheet has gone up by $3 trillion this year alone. But it was predominantly monetary, i.e., loans, asset repurchases, etc. Secondly, there's an expectation of another stimulus package, predominantly fiscal, perhaps up to the tune of $1 trillion. That'll put money into people's hands directly, hopefully. Third, interest rates being at historic lows means fixed income assets are going to return the least. So then what is the alternative? Four, there's an expectation, obviously, of a global economic recovery, late Q1, early Q2. It just means greater growth. And last but certainly not the least, given all the money supply and the economic recovery, there's an expectation of inflation. So any money left in cash is actually going to be detrimental to you. So this is why you want to think about staying invested from now on. So if you're fully invested, congratulations. If you're not, what do? Yeah, you go to Vegas, find the roulette machine that's been giving out all reds, and then put everything on black. Yeah. No, absolutely not. Look, you need to think about how you're going to approach investing and how much time you have to do so, right? So from that perspective, we really need to think about which of the two categories you fall into. Are you an investor, more longer term focused, or are you a trader and more shorter term focused with a lot more time on your hands? I'll discuss these two categories in detail next. So the first category is that of the investor or opportunistic trader. You will have a long-term view or maybe a money manager, but definitely time availability is a challenge. Typical strategies involve dollar cost averaging by buying into ETFs on a regular basis, But the two keys really are that of constructing your portfolio with your strategy in mind and managing that portfolio to rebalance or to respond to macroeconomic changes. Bottom line is, for you to take action in any of these situations, you need conviction. Absolutely critical. Second category is that of traders. This is where you perhaps have a bit more time to devote to it, either by dabbling in options or looking at shorter term horizons for your trades. But the two keys still remain, one being that of the conviction you need to put on the trade, but the other, or more importantly, in this instance, is the ability to manage the trade when it goes your way or especially so against you. Most people tend to lose money because they couldn't manage the trade. From my experience, I can tell you initially that's how I lost my money on many trades because I didn't know how to manage that losing trade. That's where discipline and trade management becomes key. So, you figured out which of the two categories you fall into. If you may have noticed, there's one thing common between the two, that is the conviction to put on a trade. So, you may be wondering how to build that conviction. Here's how I do it. Few things to consider to build conviction on your trade. Always utilize a framework that includes long term and short term signals that you want to monitor, but also look at multiple data sources and different experts that track the particular stock you're interested in. Obviously, you'll be drawing upon your own personal experience, but keep it balanced. Lastly, consult the technicals. What are the trends telling you? Separate from the fundamentals, right? This more so comes into play when you're trading, but understanding moving averages, the relative strength indices, etc., becomes critical. This is how I build conviction. In our next episode, we'll cover a bit more in what to look for as far as the conviction goes, the data sources and the experts that are referred to. But hopefully, this will get your thoughts going and you'll start considering this. Now it's time to move on to our malt segment. So, this is my first love when it comes to single malts. This is the one that got me hooked on to actually really fine scotches. It's called the Classic Laddie, or the full name is the Bruichladdich. It's got some popular references actually. This is the one that was offered by the then Senator or Minority Whip Francis in the original House of Cards in the UK to the reporter, and he says, "Here's a Bruichladdich if you know your malts." So, there's a lot of popular references to this. I love it because at a 50% alcohol level, it gives you a level of complexity that you might get from a 60%, if you will. And it's a perfect little single malt that's great for friends who may be starting off with single malts or for those who are well versed and experienced drinkers. I expect this to satisfy both their palates and should be a great single malt to be shared and enjoyed by friends together. Well, time to talk about cars. Have you seen the latest video for the Ferrari Roma? What a beautiful car that is. Unfortunately, it's not yet quite affordable, starting at $200,000. But guess what? There's a whole bunch of other cars that are affordable thanks to one thing: depreciation. We'll look at one of those cars now. Here you see a 2017 Maserati Quattroporte Q4 Gran Lusso all-wheel drive, and that's a mouthful. But look, this was listed when it came out in 17. It was listed at $116,000. 3 years later, it is now almost $46,000. So depreciation has done the work for you. Now, the question is, are you going to do that work for yourself? So this Maserati is offered by True Car. There are many such websites that will offer you different used cars. This one, the way this is structured, it'll give you the price breakdown, availability, and of course the vehicle overview, right? Exterior, interior colors, transmission, This one happens to be a 3-liter V6 turbocharged engine and all-wheel drive, just about 19,000 miles, making this a good first stop to start thinking about which ones you may want to buy. In our next episode, we'll go through the various considerations you must evaluate before you buy a used car. But for the purpose of this episode, we just wanted to give you a sense for what's possible. Hope you enjoyed our very first episode of Markets, Malts, and Machines. Please go ahead and like and subscribe. You'd help us out so we can help you out. Have a great week. See you later.